All right, everyone, here we are with ticker symbol XPEV, XPEN Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So XPEV has had a volatile day. Very bearish run, and it fell down to newer lows. It's fighting to get itself back up, and it's slightly above the 50-day moving average. The 50-day moving average, to be exact, and I can't get right on it. It jumps around, but it's 41.69, and we're currently at 41.75. That's not that far from the 50-day moving average. We're slightly in bullish territory, and the bulls are going to be fighting to get themselves back up and further into bullish territory. But the tug of war is going to be interesting for the next coming hours and this upcoming week. So we're going to have to see how this is playing out. Now, something very interesting is how this ran up, broke through resistance, and it only lasted about 2 hours and a half to almost 3 hours above the resistance level. After hitting highs here of 51.25, it got rejected. It broke through resistance, broke through support, and it broke through the 50-day moving average, ending up in bearish territory and hitting a low of 38.02, I believe it was. Let's see here what it shows us to get it right exact. 38.02 right there. That's the lowest point. So 38.02 is the lowest point, and way up here at 51.25 was the highest point. And those are the two most important numbers right now for the next coming weeks and days to keep in mind according to the volatility, if this is going upwards or going downwards. Those are the two most important points. That's the highest point before the rejection, and that's the lowest point before the recovery. Well, the momentum of recovery, but it's still not a full determined or per se recovery. We need to see if the bulls can hold up, but this momentum of recovery here. So we're going to move our resistance and support to its new location so that we can see what is important for tomorrow and the coming day. And then we're going to go ahead and see what is important in the next coming week. So I just want to get it to the T here. It shows 51.24, but give or take 51.24, 51.25, most important numbers. Now let's get this to our newest resistance level based off the last couple of hours of the day, and let's look at our support here based off what it's showing. So we're currently slightly above the 50-day moving average. As I stated, it's 41.69, and if the bulls want to maintain this momentum, obviously they need to go ahead and pull away from the 50-day moving average. How do they do that? Well, by breaking through resistance. Our resistance level was rejected twice before this point where we're at now, and that's 42.83. That needs to be broken through by the bulls, be turned into a support so that the bulls can pull away, reach newer highs and newer resistance levels. Super important for the bulls to break through 42.83, turn it into a support, and reach newer highs. They need to do this. I want to emphasize that. They need to break through this resistance to pull away from the 50-day moving average, confirm deeper control into bullish territory to reach newer highs and newer resistance levels. Super important for the bulls. Now, we're currently at 41.67, so that means that we just fell slightly below the 50-day moving average. We're gonna see in the next 30-minute candlestick, either in this video if it pops up, or if you guys do your due diligence and research after watching this video, you're going to want to check, and we're already seeing it actually show that it's 41.57, and now it's actually slightly below the 50-day moving average when it's up here. So this is going to be very interesting to pay close attention to on how it continues to play out. But let's go ahead and see what's important for the bears and what every investor should pay close attention to if it gets broken through, because this is the lowest point reached after this bullish run. So that's 38.02. If 38.02 gets broken through, we are already in bearish territory as of right now. This tug of war will still be happening, but as of right now, it's showing that we are in bearish territory. If we break through this support, I want to emphasize to all investors, pay close attention to how the stock is reacting, how quickly is it moving to newer lows, and also pulling away from the 50-day moving average. Why? Well, that means that we're getting deeper into bearish territory. We're already in it, and if we break through support, we're getting further into it. So very important for all bulls to pay close attention to this, and also overall all investors to pay close attention to how this is reacting and how quickly this is moving to newer lows and newer supports. And as we're seeing, that candlestick is changing trajectory in a downward direction. It's going to be important to pay close attention to how this is playing out and where this may be heading. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends, and also don't forget to hit the like button to let me know that you watched this video. So, trivia question. What is the highest point reached in this bullish run, and what is the lowest point reached, and why are those 2 points significant for the next coming days and weeks? I look forward to seeing your guys' comments down below. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video. In that video, I will be discussing about the S&P 500 index and how it's been rising several points on these scheduled dates. In the video, I go into more detail about it, but just to do a quick summary, on these scheduled dates, the Federal Reserve is pumping the markets. By doing so, the S&P 500 index rises up with it. The charts and the dates speak for themselves. But what does that mean for us as investors? Well, if the S&P 500 index is rising up several points, there's individual ticker symbols within the S&P 500 index rising up with it. They're rising up anywhere from 30 cents to $3 per share. I know it may not seem like a lot, but per share that does add up. I know that sometimes we're looking to make more per share or make these big gains, but like I always say, if you put $1 into the market and you got back $2, you've done a great job. Profits are profits. I'm not there in the video to tell you what to buy, sell, or hold. I'm not guaranteeing you profits. You have to do your due diligence and research. I'm just there to inform and enlighten every single investor and viewer on the great news that there is an opportunity to maximize profits and minimize losses for as long as the Federal Reserve continues to pump the markets. Up to now, as we see it in the charts and the dates, they speak for themselves. In the video, like I said, I go into more detail about it. I wouldn't want you guys to miss out on it. Super helpful information for every single investor and viewer. And not only that, but you can also check it out for yourselves from the sidelines if you don't feel comfortable investing just yet using that strategy. But check it out. You can see it. And also, you can pick an individual ticker symbol and look at the S&P 500 index on those dates, and you'll see that some of them correlate in the same movement. Obviously, they're not moving in the same amount because an individual ticker symbol can only move so much, and the S&P 500 is moving because of 500 different ticker symbols. But you can see the correlation, how they directly and indirectly affect each other or correlate. So check it out. I hope you guys check it out and see value in that video. I look forward to seeing your guys' comments about that video on that videos section. And thank you guys so much for watching, and let's make some money.